Hello, this is Si Wing Yi from the Yi Real Estate Network. I'd like to take this opportunity to share with you a case study of one of our property. Uh, so what I'm trying to do is to compare before and after. Now, uh, past performance is not an indication of future performance. So the So disclaimer I'm sharing with you is no one have a crystal ball, right? We do not know the future projection of any real estate investments. Of course, as always, consult your financial advisor to determine whether any kind of investments are appropriate to your situation and your risk tolerance and your goals, right? So having said that, what I'm about to share with you is one example of many. Okay, and I could share you many examples of what has transpired in the past several years on some of the rental properties that we've been promoting. So, all right, so just keep that in mind. Keep this in mind that uh, as long as you have a long-term investment horizon, that's the key. Because when you have this philosophy of buy and hold long term, right? As long as your property is in a good area with is a good rental market, you have good positive cash flow, and the rent is good, and what have you. Just stay the course, because if you have whether you have a 10-year investment horizon or 15 or 20-year investment horizon, as long as you have this mentality and the discipline and the focus to invest for the long term, you can overcome any kind of crash, correction, or bubble, or whatever fancy word that you may be hearing out there from other negative entities, right? So, with that said, I'm just again sharing with you some examples that in the past 3 years what has transpired in one of our market. Although all the markets we're promoting have done well over the past number of years. So again, if you want to go over your specific situation, obviously consult with me. I'll be more than happy to do a FaceTime, a Zoom meeting with you on a one-on-one basis, a complimentary consultation, or even a phone call, a phone appointment, so I could go over your real estate investment goals and objectives, your risk tolerance, and your goals and what have you. All right. So with that said, let's allow me to share you this case example of a real situation. All right. So here we go. All right, here we go. So this a property, although we know most of the time, I would say 80% of our network turnkey properties that we present are single family home rentals, right? But the other 20% we do, promote duplex, triplex, and fourplex. Again, our business model is such that we do our best. It all depends on the situation, right? Over the years, to present new construction, new build, single family homes, duplex, triplex, and fourplex that can cash flow, right? So they have a good rent to value ratio of 1%, or maybe slightly 1%, maybe a 0.07 or 1%, right? So that way we can be assured that we have a good cash flow. All right, without further ado, okay, let's get to the heart of the matter. So this fourplex that we presented, it's so funny. I went back and go over my software to review what some of the video newsletter presentation that we did in the past, and I happened to pick this one. This is a fourplex in San Antonio, Texas, and this presentation, this newsletter was presented by me to our network of real estate investors uh, in December 2016. So a little bit more than 4 years ago, we presented this property. This at that time, 2016, this is a brand new fourplex in San Antonio. which is as you can see, right? The purchase price was $460,000. And I'm not going to go over the numbers, but if the minimal down payment is 25%, then at the end of the day, if all of the 4 units are rented at 25% down payment minimum, you can do a Fannie Mae guideline, a Fannie Mae loan, right? 1 to 4 unit is a Fannie Mae lending up to 10 mortgages, but very favorable interest rate. Anyway, at that time, the rent, I believe, is around $1,000 per door. So times 4 doors on this fourplex, $4,000 monthly gross rent on a purchase price of $460K. So you will, at 25% down payment, your monthly net cash flow is around 1,000. So very good cash flow at 6% capitalization rate, what have you. All right. So let's fast forward. Again. Keep this in mind. 460K 4 years ago, December 2016. This is a fact. All right. So this fourplex in San Antonio, located northeast a part of San Antonio, which is around 5 miles from U.S. Army Fort Sam Houston, 5 miles to the northeast of Fort Sam Houston. By the way, I was in active duty U.S. Army stationed at U.S. Army Fort Sam Houston years and years ago. All right, so I know the area very well, still do, and so this property is around a few miles from Fort Sam, and also several miles from Randolph Air Force Base. So very good rental market. San Antonio have a very consistent rental market for many, many years. And there's no reason to believe this market will not continue with a strong rental market because of there are, at least 3 major military bases to supply many active duty soldiers as great tenants like they have been. And also many other tenants as well, not just military folks, right? So obviously San Antonio Metro is growing extremely fast, but I will talk about this in some other videos. So for the moment, I'm just gonna go over this case study, all right? 460K, keep that in mind, 460K, December 2016, all right? Not then, today, this very same fourplex, brand new construction as of today, right? The first quarter of 2021, same floor plan, around 5,400 square foot. This per unit is around, I think, 1,300 square foot per unit, 3-bedroom, 2-bath, which is amazing, right? And the same floor plan by the same builder today is at 715,000. As a matter of fact, 6 months ago, this floor plan right here, brand new, not being built yet. I mean, it's still under construction. In this particular community, I believe there are, I think, 40 of these fourplex in the various stages of construction. Some already been completed, some are 2 months away from being completed, some are 6 months away, what have you. All right. So right now, because of the cost of construction, because of the cost of lumber, we all been hearing that, right? Cost of lumber has skyrocketed. So all the builders all over the country are systematically increasing their prices. And these buildings in Ontario are no different. So 6 months ago, the price on this building 4 unit is 620, I believe. Now, a few months later, is 715. So that's not the end of it. And the rent, you still can cash flow. I mean, not as much as before, right? At 620K, you'll cash flow like maybe $850, $900 on all 4 doors, which is not bad, right? But the increase of price almost 100 grand in the past few months, from 620 to 715. So your cash flow going to be lower. So per door, if all rented, if the renters are paying $1,350 per door, per unit, if you will, if you put 25% down payment, minimum down payment under the Fannie Mae lending guidelines, right, 1 to 4 units at whatever interest rate, 3.5, 3.7% based on current today's historical low interest rate, still low interest rate, even though the interest rate has increased slightly recently, still a historic interest rate, all right? So based on 715, the best cash flow you can achieve per door, maybe $150, maybe 200. So if all 4 unit gets rented at 1325, 1350 per door at 25% down payment with the interest rate of 3.5 or 3.7. So your monthly net cash flow is around $600, $700, not that high. So it is what it is. So having said that, I'll be honest with you, I will be somewhat reluctant to promote this fourplex right now because to me the cash flow is good, not really good, right? So I have no reservations. But had you bought 6 months ago, like a couple of my investors did, at 620K, your cash flow would have been great, would have been better, right? And you're locking at the price, but you purchased a lot. When you sign the lot contract, you're locked in on the contract price. If the builder increase their prices subsequently, you will reap the benefit of the equity uh, appreciation during the construction time, right? So once again, too many of you simply are procrastinating. Too many of you are simply going through this analysis by paralysis scenario, and then like a few years later, you can wait. Prices will continue to increase. You're gonna kick your butt for not pulling the trigger at the earliest possible moment. That's how it is, right? That's the difference between successful investor versus non-successful investor. Successful investors, they understand the time to purchase to buy is now instead of procrastinating and waiting. So, okay, now the next slide I'm going to show you is a similar fourplex located in Schertz, SCHETZ, this little town, like around 10 miles, maybe 10 miles east of this location, right? And same floor plan, same square footage, around 5,400 square foot, brand new construction. Okay, maybe they have more amenities, I'm not sure, but I just found it on the Zillow. Okay, look at this. Right now, March of 2021, this Zillow link just popped up a few days ago. Do you see it? Is estimated at 815,000. Same builder, same floor plan, except they're a few miles away, around 10 miles to the east of this location, located in a town of Schertz, which is, as you can see, which is a suburb of San Antonio, no, suburbs. I don't know why. I'm not gonna. I don't know why it's 815. We're talking $100,000 more on a similar fourplex a mere few miles away. So now you know even a multi-unit, a new construction multi-unit located in a good real estate market can appreciate just as much, if not sometimes, if not more, as a single family home residential investing, right? Property. So let's recap. This type of floor plan, same builder, right? 4 years ago, we promoted at 460K. You could make the argument 4 years later, 4 years and a couple of months later, is selling for 815. So from 460 to 715 to 815, right? Okay, this example could be extreme, if you will, but I'm just going with the real data, okay? I'm not saying all property is going to be like this for the foreseeable future, but hindsight is 2020. I I just warn any of the real estate investors out there, right? It's most important thing is do your research, do your due diligence, uh, take action, right? Pull the trigger because you buy real estate and wait instead of wait to buy real estate. You know, I mean, it's happening right now. It's happening 5 years ago, happened 10 years ago. It's going to happen 5 or 10 years later. It's all about, get in, own the asset, and just allow the asset to grow, hopefully, over time. That's it. Buy and wait instead of wait to buy. All right. So that's my message that for those anybody, any investors that can pull the trigger and any particular time, that's a win for the for many most other investors. They don't take action for whatever reason. There are multiple of excuses and reasons, what have you, and that's a shame, right? So that's it. That is the extent of my presentation. I don't know how else to put it. Uh, that's how real estate investing is. I mean, it's all about taking action. It's all about, you know, achieving your future wealth through a diversified real estate portfolio. Turnkey real estate investing, 1 to 4 unit cash flow properties in a good area of the US. Okay, thank you so much for listening. This is Si Wing Yi from the Real Estate Network. Have a nice day. Bye-bye.